Silver could be about to leave gold behind. Gold has stalled. Silver has surged. Over the past week, gold is down around 1%, while silver is up 9%. That is not a small difference, and it may be the first sign that silver is starting to trade on a completely different story from gold. Now, gold is sitting near $4,700 an ounce. Silver is now around $87 an ounce. So this is not just a normal precious metals move. This is a separation. And if trade improves, oil stays high, and inflation pressure remains in the system, silver could be in a stronger position than many gold investors realize. Welcome to the 2% Brief. Today I want to make a reasoned speculative case. This is not a prediction, it's not investment advice, but it is a scenario worth taking seriously. Because silver may now be doing something very important. It may be starting to leave gold behind. Now, when people talk about precious metals, gold usually gets most of the attention. That is understandable. Gold has history. Gold has central banks. Gold has the safe haven story. When investors are worried about debt, war, inflation, paper money, or confidence in the system, gold is normally the first metal they think about. But silver is different. Silver is not just a smaller version of gold, and that is the mistake many people make. Silver is a precious metal, but it's also tied to the real economy. It's used in electronics, solar panels, electrical systems, industrial equipment, and modern manufacturing, not to mention AI infrastructure. So silver can move for two different reasons. It can rise when investors want protection, but it can also rise when markets start expecting more demand from industry, trade, and production. And that is why the current move matters. Gold has stalled, silver has not. Gold has hesitated, silver has pushed higher. And when silver rises while gold pauses, the market may be telling us something different. It may not just be saying precious metals are strong. It may be saying silver has its own reason to move. That is the real signal here. Now let's bring in the macro picture. President Trump is in China for talks with President Xi. The markets are watching for any sign of progress on trade. They're also watching whether China may play any role in easing pressure around Iran. At the same time, oil remains elevated. Brent is still around $106 and WTI is still around $101. That matters because oil is not just another commodity. Oil affects transport. It affects shipping. It affects food. It affects manufacturing. It affects mining. It affects the cost of almost everything that has to be moved, made, or delivered. So the market is dealing with a very unusual combination. There is hope that trade may improve, but inflation pressure has not gone away. And that is where silver becomes interesting. If trade improves, gold may not be the biggest beneficiary. Gold often benefits most when fear is high. If geopolitical pressure eases, some of that fear premium may cool. Not disappear, not collapse, but cool. Silver, however, may still have another driver. If trade improves, if manufacturing expectations improve, if demand for electrical systems, solar panels, data centers, and industrial production remains strong, silver has a story that gold does not have. Gold is mainly bought for protection. Silver can be bought for protection, but it is also consumed by industry. That is the difference. And it may be why silver has started to outperform. Now, let's keep this grounded. I'm not saying silver goes up in a straight line. It doesn't. Silver is volatile. It can rise quickly and fall quickly. Anyone who has followed silver for any length of time knows that. But the recent move deserves attention. Gold down around 1%, silver up around 9%. That is not just daily movement. That is a meaningful divergence. And when two metals that often move together suddenly start behaving differently, investors should ask why. The simple answer is this. Gold is mainly responding to fear, rates, the dollar, and central bank behavior. Silver is responding to those things too, but it's also responding to demand expectations. So silver has more ways to move. If the world gets worse, gold can do well. If inflation remains sticky, gold can do well. If confidence in money weakens, gold can do well. But silver can also do well if the world starts producing, building, wiring, manufacturing, and consuming more. That is the part many people miss. Silver sits between two worlds. It is part precious metal, part industrial metal, part inflation signal, part real economy signal. That is why it can suddenly move harder than gold when the conditions line up. And the conditions may now be lining up. We have elevated oil. We have inflation pressure. We have trade talks. We have possible geopolitical easing. We have silver already outperforming gold. That is not a normal mix. It is a very specific setup. If fear falls, gold may pause. But if trade expectations rise, silver may continue. That is the case. Not certainty, not a guarantee, but a serious possibility. Now, if you like this sort of analysis, please give this video a thumbs up and subscribe to the channel. I'm now going to go on to the gold to silver ratio, but before I do, pop along to Substack, the 2% brief, and sign up for free there. Links are in the description and comments section below. Now, one number helps us understand all of this better, the gold to silver ratio. The GSR simply tells us how many ounces of silver it takes to buy 1 ounce of gold. So if gold is around $4,700 and silver is around 87, the ratio is roughly 54 to 1. In plain English, 1 ounce of gold buys about 54 ounces of silver. When that ratio rises, gold is gaining strength against silver. When that ratio falls, silver is gaining strength against gold. And right now, silver has been gaining strength. That matters because precious metals investors watch this relationship very closely. Now, it does not automatically mean silver's cheap. It does not automatically mean gold is expensive. But it does show that money is moving more aggressively into silver relative to gold. And if that continues, it can attract more attention. Gold investors start asking whether they're missing something. Silver investors become more confident. Commodity traders begin watching the relative move. And suddenly, silver is no longer treated as an afterthought. That is how these moves can build. Slowly at first, then quickly. Now let's look at why silver could benefit from a trade improvement more than gold. If the United States and China even manage a limited improvement in trade relations, the market may start pricing better global activity. More goods moving, more production, more manufacturing, more demand for industrial inputs. That does not mean the world suddenly becomes perfect. It does not mean all problems disappear, but it changes the market psychology. A world expecting more trade is different from a world pricing constant disruption. And silver is much more exposed to that shift than gold. Gold does not need factories. Gold does not need solar panels. And gold does not need electronics demand, though there is a tiny bit there. But silver does. Silver is used because of its conductivity, its physical properties, and its role in modern industry. So if investors start believing the global economy may reopen further, even slightly, silver can start to look more attractive. That is why this moment is important. The market may be moving from a simple fear story to a more complicated story. Less fear in some areas. Still high inflation, still expensive oil, still strong demand for real assets, and possibly better trade. That is much more interesting an environment for silver than many people realize. And here is the reality anchor. Imagine a factory, not a trading screen. If trade improves, goods move. If goods move, transport is needed. If transport is needed, energy matters. If production increases, industrial materials matter. If electrical systems, solar panels, electronics, and infrastructure keeps expanding, silver demand matters. Now, gold does not have that same link to real-world production. Gold is mainly about trust. Silver is about trust and activity. That is why silver can sometimes surprise people. They look at gold and assume silver should behave the same way. But silver has this second driver. And when that second driver becomes important, silver can begin to separate. Now, there's also a counter-argument, and it is important to be honest about it. If trade talks fail, silver could weaken. If the dollar strengthens sharply, silver could come under pressure. If oil falls hard and inflation expectations cool, some of the recent support may fade. You may hear other YouTubers telling you sell your gold and silver now, because that's what they believe is going to happen. If investors suddenly become nervous and sell risk assets, silver can fall more sharply than gold because it is more volatile. So this is not a one-way argument. Silver is not risk-free. It's not guaranteed, and it's certainly not calm. But that does not remove the signal. The signal is that silver's been rising while gold has stalled. That tells us the market may be starting to price something different. Not just safety, not just fear, but demand, inflation, industry, supply tightness, and a different kind of precious metal cycle. That is why the title of this video matters. Silver could be about to leave gold behind. So my conclusion is this. Silver is not simply following gold. Silver may now be telling its own story. And that story could become one of the most important precious metal signals of the year. If global trade improves, if inflation remains stubborn, and if oil stays elevated, then silver may have a stronger case than gold for the next phase. Again, this is a reasoned, speculative assessment. The audience has to decide the probability. But the numbers are difficult to ignore. Gold has stalled, silver has surged, and when silver starts moving like this, it is usually worth paying attention. Now, if you found this useful, please like the video, subscribe to the 2% Brief, and switch on notifications. Pop on over to Substack, sign up there, links below, and let me know in the comments. Do you think silver is now beginning to leave gold behind? Or is this just another temporary move before gold takes the lead again?